In a stunning move, Prime Minister Modi's government has suspended the use of the US dollar for domestic transactions in India. This bold decision marks a significant shift in the country's economic policy. This isn't just a policy tweak, it's a direct challenge to American economic dominance. By sidelining the US dollar, India is making a statement on the global stage. India's message: if the US wants a trade war, India is ready to fight back. The country is prepared to defend its economic interests with the same vigor it defends its borders. The ban is designed to pressure Washington to lift heavy tariffs on Indian goods, which have been a point of contention for years, escalating tensions between two major democracies. This move could redefine the economic relationship between India and the United States. Businesses in India must now settle accounts in rupees or other currencies, a significant adjustment for many, aiming to insulate the economy and make US companies feel the pinch. This could lead to a re-evaluation of trade practices and dependencies. Multinational corporations are scrambling to adapt, trying to navigate the new financial landscape, while importers and exporters face chaos. The logistics of international trade have become more complicated overnight. The government calls this a temporary measure, but the long-term implications are still uncertain. But the unpredictability has rattled markets worldwide. Investors are wary, and stock markets are reacting with volatility. More than a trade spat, this is a strategic maneuver. This is India asserting economic sovereignty and forcing the world to pay attention. The global economic landscape may never be the same again. The conflict began not in a vacuum, but as a culmination of years of simmering tensions between the United States and India. Both nations had long enjoyed a complex relationship, sometimes partners, sometimes rivals, shaped by shifting global alliances and economic ambitions. But in 2025, the dynamic changed dramatically. President Trump's America First trade doctrine became the driving force behind a new, more aggressive approach to foreign policy. The administration was determined to prioritize American interests above all else, even if it meant upending long-standing partnerships. In August 2025, the US government imposed a sweeping 25% tariff on all Indian goods entering American markets. Officially, the White House cited national security concerns, but behind closed doors, the real motivation was clear. Washington was alarmed by India's deepening economic ties with Russia, especially its surging imports of Russian oil, which threatened to undermine US sanctions and global influence. President Trump didn't stop there. He issued a stark warning: if India refused to reconsider its relationship with Russia and continued to defy US pressure, tariffs could be doubled to a punishing 50%. The message was unmistakable. America was willing to escalate. US officials publicly accused India of unfair protectionist policies, arguing that New Delhi couldn't expect unfettered access to the lucrative American market, while simultaneously strengthening ties with a nation seen as a strategic rival. The rhetoric grew sharper, with American diplomats openly criticizing India's trade barriers and subsidies. At the heart of the dispute was agriculture. The US wanted greater access to India's vast and rapidly growing consumer market, especially for American farm products. But India, wary of the impact on its millions of small farmers, refused to open its doors, determined to protect its agricultural sector from foreign competition. With a staggering $46 billion trade deficit in India's favor, President Trump saw tariffs as a powerful tool to force New Delhi to the negotiating table. He believed that economic pressure would compel India to make concessions and realign its policies with American interests. As both sides dug in, the world watched anxiously. The stage was set for a dramatic confrontation that would test the strength of US-India relations and reshape the global economic order. The tariffs hit Indian factories hard. Industries like textiles, leather, and electronics, employing millions, saw US orders vanish overnight. In cities like Tirupur and Agra, factory owners faced canceled contracts and looming layoffs. Small and medium businesses, the backbone of Indian manufacturing, teetered on collapse. The electronics sector, a Make in India success, risked losing billions in future business. The uncertainty froze investment and expansion, threatening India's growth. For workers, the pain was immediate lost jobs, reduced wages, and a grim outlook. The crisis forced India's government to act decisively. India's Russian oil purchases weren't about defiance, they were about survival. As the world's third-largest oil importer, India faced soaring prices after Western sanctions on Russia. Russia offered discounted crude, stabilizing India's economy and keeping inflation in check. Indian officials say the US initially encouraged these purchases, as long as India respected a price cap. The logic keeping India supplied would prevent global prices from spiking. Now, with tariffs in place, India feels betrayed for following a path the US once supported. For New Delhi, this is about energy security and national interest, not geopolitics. The sense of betrayal fuels India's tough response. India accuses the West of hypocrisy. While the US and EU criticize India's trade with Russia, they continue their own business with Moscow. In 2024, EU-Russia trade hit $67.5 billion, with record imports of Russian gas. The US still buys strategic Russian goods like uranium and palladium. India argues, if the West can make exceptions for its needs, why can't India do the same for energy security? This double standard has hardened India's resolve. India feels unfairly penalized for a global problem it didn't create. The dollar ban is India's way of exposing these contradictions. Banning the dollar is a bold gamble, a move that could reshape the global economic landscape. India aims to pressure the US by targeting the heart of its economic power, the dominance of the dollar in international trade. The hope is that this disruption will push American businesses to lobby for an end to tariffs and other trade barriers that have been a point of contention. If successful, India could gain significant leverage in trade talks, potentially accelerating the global trend towards de-dollarization and enhancing its own economic sovereignty. But the risks are enormous. Indian companies could face severe financial strain, and the uncertainty might drive foreign investors away, leading to a potential capital flight. The rupee could weaken significantly, exacerbating inflation and making imports more expensive, which would hurt the average consumer. The US, in response, could retaliate even harder, escalating the conflict and potentially leading to a full-blown trade war. India is walking a tightrope, balancing the potential for economic turmoil against the possibility of greater economic independence and global influence. Whether this move will be seen as a masterstroke of economic strategy or a grave miscalculation remains to be seen. The world is watching closely, as the outcome could have far-reaching implications for the global economy. The future of US-India relations hangs in the balance. Will the US negotiate or escalate? The next trade talks are critical. This standoff could reshape the global economic order, inspiring other nations to challenge dollar dominance. Investors are already nervous, with gold prices soaring and markets on edge. A prolonged conflict could disrupt supply chains and slow global growth. The world hopes for diplomacy, not escalation. For Modi and Trump, this is a test of leadership and vision. The choices made now will echo for decades.